The point of this lesson is to teach you that stocks reverse throughout the day. Even stocks that are very strong just don't go straight up. They move sideways and down as well. So let me show you this stock that's very strong. Marriott International, or Marriott Hotels, has been going up quite a lot for the last 2 months. It's up about 20% in the last 2 months. And this is today, November 6th, 2017. So I want to show you how Marriott opened today. Now these are each 2-minute candles. So that's the first candle of the day right there. So it's bouncing around towards the open, and it looks like it might go up from here and might continue the uptrend. But then what do you see? You see 1, 2, 3 red candles in a row pushing things to the side. So that's a pretty good sign right there that the sellers are overcoming the buyers. Of course, it's no guarantee that the stock is going to go down right there, but it's a good indication. So you've had 6 minutes to look at this and see that it's not going up. So if you sold it short right there, you're risking maybe 10 or 15 cents. You could easily put a stop at 15 cents right about here. And then, in fact, it did go all the way down 1, 2, 3, 4, 5 red candles in a row, and then went all the way down to here, which is below 121. So that's about a 60 to 70 cent move, which is not bad, and it happened in 10 minutes. Okay. Once you see these green candles start to pop up, that's a really good indication it's the end of the move. You had a sharp down move, and you have 2 green candles in a row. I'm out. I want to lock in my profits right there. Because first off, it's a strong stock, and second off, it's showing an up move again. And since we have no idea what it's going to do after that, I want to get out. I want to lock in my money. So I just made 60 cents there, let's say. Now, let's say that I went long. I reversed really quickly, and I bought right there at a price of 121. Well, if the stock went up here, and then I see it reverse and bouncing around, I'm going to get out, lock in some profits. That might be 20 cents or 25 cents. Now, I don't know that it's going to go up here, but I just see this big push down and then a red candle, so I'm out. And I lock in a little bit more profits. This is called not swinging for the fences, but getting singles and doubles in the jargon of baseball. We want to just get on base and not necessarily swing for the fences. So you just want to have small, steady gains. And if you do this several times throughout the day, it adds up over time. So if I made 60 cents on that trade and then 25 cents on that trade, and let's move forward. Hold on. This is the same trading day. Let's say I see it start to move up here and I buy it right about there. That's 121.80 right about there. It goes up. It's only 16 cents and it comes back down. I wouldn't have gotten out on that. I might have scratch traded right there. If I had held on, it would have gone up to 122.32. That's about a 50-cent move right there. And I wouldn't have caught the whole thing. Probably would have caught 35 or 40 cents as it comes back down. I would have got out. And then once it comes over here and it starts to go up again, that's when I'm going to start to buy right around in there. That's 122.30. And if I had held on, even though it does have some jigging up and down, I'm not going to get out till I have a serious down move. So right around there, let's say I even got out at the bottom. 122.75 is right there. I would have made about 50 cents on that trade. So you can see that these add up quickly. Just a few of these and you've got $100 a day. All you have to do is read and make a reasonable judgment when a stock is reversing. or breaking out to a new trade, to a new high. So there's a breakout right there. You could have bought into that. Now you can see they don't always work. If you bought into that one, it looks like it would go through, but it didn't. Kind of fell back, so that would have been a small loser. No big deal. Looks like it's going up again. Buy that one, up and down. Okay, you got some money on that one. That's kind of what you do over and over if you're momentum trading. That's what this is, momentum trading. This is where you see the little momentum changes and you risk a little to make a good move. Now, these moves are about 50 cents up and down in Marriott, but you're going to get in and risk 10 or 15 cents to make 50 cents. That's great. Very good reward to risk ratio. If you're even right 1 out of 3 times, you're going to make money. So that's great. Okay, look at what happened later on with this. Marriott went all the way up, and it hit a high at 2 o'clock, and it's come way back down again. Here it is. It's 3:24 p.m. Eastern Time, and it's dropped all the way from 123 down to 122. There's a dollar move right there, and it's almost all in one direction. So it's followed through. So easily, if you had read that well and played it well, you could have made $2 per share trading Marriott today. So this is how momentum trading works. I'm going to show you different styles later, but that's it for now. And good luck and happy trading.